2020 and you guys just downloaded Robinhood or just started stocks and you want to know which stocks to buy right now. So I'm gonna start this off in saying when it comes to stocks and you guys want to get started, you don't really want to invest any money that you're not afraid to lose because you don't really know what you're doing, especially on these smaller companies. So what I'm gonna go ahead and recommend, I'm gonna go into the top 100 companies. These are the most popular companies, and these are a list of companies that are trading on Robinhood pretty frequently. As you can see right here, almost 100,000 people are trading today on Robinhood, this company. And what I would just go into is basically the biggest companies that you know are not going to fail at all. If you look at Microsoft and you look at Apple, they're both over 1.5 trillion dollars in terms of their market cap. And another company is going to be Amazon. So these companies are huge. If you want to invest very low risk into a stock, I would invest in something like Amazon. Now, don't get afraid because it's like nearly $3,000 for Amazon stocks. If you have an account in Robinhood, there's a good chance you should have access to buy in dollars, and you could literally just go in and just buy $50 worth, and that will be this much in shares, and you just literally click buy. So I would recommend something like this. When you're buying a stock, you definitely want to look at the 1 week, the 1 month, the 3 month, year. You want to look at these graphs to make sure that the company is healthy and it's growing. If it's steadily growing up over time, as you could see, like the stock 5 years ago, it was like this. If it steadily grows up over time, then that's a good sign that the company is healthy. They're making a lot of money. Look, about 50 analysts are saying it's 92% buy. If you look at their earnings, they're doing, that looks like maybe they're doing a lot. Usually these are going to be in like millions or billions or something like that over time. It's not like $4.73 in quarter 1. So it's something of that nature. Alphabet, Google, Netflix, you have recommended stocks that people bought after buying this one. And these are the news articles that you can see that goes into depth on what's going on with the company right now. If it's good news, usually that means that the stock's going to go up over time. If it's bad news, it usually means that the stock's going to go down. So here we see that the graph is at almost $2,900, and I don't want you guys to get hooked on. Don't get hooked on this number per se, this big number. It's not really about that number. It's more about the percentage. So if we look at this number, this is 5%, and then we go over to, let's say, Apple. And 1 week ago, it's up 0.89%. And let's say Nikola Motors, however you say that. Let's do the 1 month. So 1 month ago, this stock was worth like $29 or something like that, and it jumped 80%. So there's a lot more movement in these companies that are worth a lot less than the bigger companies, but it's more of a risk. So my recommendation is, and I'm no CPA or anything like that, I would invest most of my money into Apple, Amazon, and Tesla. Tesla, because a lot of analysts are saying that it might soar up to like $15,000. And what that means is if you bought Tesla at $1,000, then that might 15x your money, any money that you have in here. So that's how it grows. So let's say this percentage is up 20%, just to give you an idea of what kind of money you could be looking at. So let's say you put $1,000 into Tesla 1 week ago, and it jumped up 20%, as you could see, then your $1,000 would now be worth $1,200. So technically, you would be profiting. Your equity would have rose to 1,200, so you're profiting $200. Now you're not really profiting until you actually take your profits out, and you're not really losing until you actually cash it out. And what I mean by that is when you go over here and you click, when you have your stock and you click sell, that's when you actually redeem your profits. But you might not want to do that in the short term, because if you look over this graph in the long term, it was like 1 year ago, Tesla was 225, and now it's 1,200 per share, almost 1,200 per share. And you could see that it went up 400%. So let's say you invested $1,000 into Tesla 1 year ago, then your $1,000 that's going to be, how many shares of that? That would be like 5 shares of Tesla. I'm just rounding off, just so that it's simple math. So 5 shares of Tesla, and now your 5 shares of Tesla is going to be worth about 1,100 each. So back then you bought $1,000 worth, and now you can sell it for about $6,000 worth, something close to that. So literally, if you just invested 1,000 into Tesla 12 months ago, your 1,000 would turn into about close to $6,000. And that doesn't mean you should sell right now, because what if the next 12 months it does it again and again and again? You kind of want to get good at saving your money into these solid companies and keeping it there, because if you take out your money, if you take out a little bit of profits, then your money it's not going to be able to make as much money. For example, if you put in $10 into Tesla, if you put in $10 into Tesla 1 week ago, your money would jump up 20%. So instead of making $200, you would make $20. Hopefully that makes sense for you guys. If it doesn't, let me know down in the comments. But basically, I'm just saying, focus on the percentage. Focus on that. And this is the volume for today. I'm on Robinhood's desktop, but you can also see this at the bottom of your screen if you're using the app below. And if you haven't downloaded Robinhood yet, there's going to be a link in the description below to get your free stocks, also with Webull. And make sure you guys are getting paid to download it, pretty much. And I would say get started right away and let your money grow. This is probably one of the easiest, simplistic things that you could do that I found out, that you can actually have your money grow and keep growing and keep growing. So let's look at another one that's actually coming out. Microsoft, they're coming out with their new Xbox, and they have a lot of digital products, which Microsoft is definitely a good recommendation. As you can see, a lot of the analysts are recommending to buy. Nobody's saying sell it. One reason why it's good to invest in, because they have a lot of cloud computing products, such as their Microsoft Word, Microsoft Teams, video conferences like Zoom, and a lot of people are going to be on these software platforms because of the pandemic that's going on, and that means Microsoft can make a lot more money. Their Xbox is going to be coming out soon, so if a lot of people buy the Xbox, then that means the stock's going to go up. Just 1 week ago, it was at 195, and now it's at 204. So it went up about 3.5%. So don't worry about if it's a small percentage. Really, any gains is awesome. I mean, if you think about it, if you just leave your money in your bank, what is it going to do? Is it going to go up 3% in 1 week? No. Is it going to go up 3% in 1 year? Probably not. There's only a couple of banks out there, and they're really only banks that have a high APR, high APY, high interest savings account, that even get 3%. But imagine if you kept all of your money into Microsoft 12 months ago, then you would get 50% profits on your money right now. So what that means is, for example, if you put in $1,000 into Microsoft 1 year ago, now your money would be worth Now your stocks or your investments, your equity would be worth 1,500. So that would be a 50% profit, $500 profit if you're speaking in dollars. So that's all I have for today. Let me know what you guys want to see in the next videos. This whole channel is all about tech and money. And don't forget to subscribe if this is your first time here. And tap that bell notification if you want to make some more money. Peace.